Overall, we expect a lot of divergence in emerging markets in 2016. China will continue to slow whilst India accelerates, for example, and Brazil and Russia will remain mired in recession. There are two key economic risks facing emerging economies in 2016, and these are the Fed liftoff and also the continuing China slowdown. So the Fed raised interest rates in December for the first time since 2006. And this is a key point because it marks the end of cheap money, and this could affect several key emerging markets, particularly those reliant on cheap capital. The second risk is the China slowdown, and this will affect those who previously did a roaring trade in commodities with China in particular. Turning to consumers, around 50 emerging markets will see consumer expenditure grow by more than 5% in 2016. But the theme of divergence continues here as well, because a similar number of emerging markets will see consumer expenditure grow at a slower rate than the developed country average. Looking at population, for the first time, the number of urban dwellers will reach 50% of the overall population in emerging markets, and the number of internet users will approach 1/3 for the first time. Overall, 2016 looks likely to be a more positive year for emerging markets than 2015 was. But as for the global economy on the whole, the risks are on the downside.